Welcome back to your home of hopium-free crypto and economic market cycle updates. Today's video is a big one, so make sure you stick around for the whole thing. We're going through the Bitcoin bear market rally. What does that mean? What to look out for? Timing of it, how long should this last? And also looking at pricing as well, looking at the macro picture of what I'm seeing at the moment for Bitcoin. So make sure you've subscribed and liked the content up. Obviously, it does help the channel out as well. So if you are a loyal viewer, smash the likes. Let me know in the comments as well how long you've been watching the channel for. Without further ado, let's crack on with today's video. So this is what we're looking at today. Bitcoin traders selling off. How long is a bear market rally? First thing I want to have a look at here is the short term, just a quick update before we get into the long-term stuff. So I've got here traders selling off, and we're just looking at this particular pattern here where all these little yellow arrows pointing down are. This is the gravestone doji. So if we're using our Gann analysis in terms of bars, these things look like key reversal patterns. So they look like keys, and if they're at the top, they're a reversal. They're basically a reversal, and if they're at the top, then they go down. If they're at the bottom, like this, then the market tends to go up. These are basically just reversal patterns, but a lot of people know them from candles. And you can see it's a gravestone doji here, market down. Gravestone doji-esque, down. You got a couple here at the top, down. A little one in here, a little bit down, okay? 1, 2, 3, 4. We're up to our fifth one, still 14 hours to go on this particular bar, potentially down, but we're still holding up around 23.7, 23.8. And then the next support zone down is about 22.4. That also lines up with another more macro 50% if we move back from the 1 day. But basically, just looking at where the traders are selling off, why this happens in terms of this pattern, and why I believe and why we know that traders are selling off, is that you can see the market moves up intraday during that bar or that candle period, and then it drops down. And essentially, it drops because traders are selling, maybe long-term investors, but anyone in the market is selling, and that's what gives it that pattern. Early in the trading session, whichever time frame you're watching, markets are pushing up, people are getting excited to break into new recent highs. You can see each of these times it breaks into recent highs, and then traders come in, anyone wanting to take some profits on their long-term gains, so basically their trades that have gone to the long side are selling off, and then eventually we get the rollover and the market finds a new base. Traders come in again, push the price higher. So this is just the backwards and forwards, looking at where the traders are selling off, and we've seen a lot in recent days. So one thing I'd like to note when it comes to this short term is we saw this pattern back on the 11th of August now, so 6 days ago, and we could be fooled to say, well, market should have gone down from that point. It didn't, but really to the upside, there wasn't that much more so far to be had in that trade. There's only 1% from that peak. So a lot of people get caught up trying to pick the exact top, but if a signal comes in and it meets your expectations, it meets your plan, then there's no harm in selling off some of those profits when these signals come in at end of moves. As with any technical indicator, they should be used in conjunction with other technical indicators for confirmation. So there's no point in just taking a signal off this one candle pattern alone. It needs to be used in conjunction with other trading signals. So like I said, this is on all time frames, and this helps when we look in the macro pictures, because these do come up on macro pictures, which we'll look at in just a second. But I wanted to give a quick shout out to TIA Premium. So this is our education course. Link is in the video description, where else. But this week is our monthly lesson, and Michael and I are diving into big long-term lessons that we've had to go through to become full-time traders and full-time investors long before we were on YouTube. So I've been going for over 16 years as an investor. That was from real estate, then into trading. And Michael as well has been going for about 13 years now, coming up to 13 years full time. So this month's lesson is going to be on how we got there and that transition from basically part-time, every day, you're 9 to 5, into that full time. So if you're interested in that and want to learn how to get into that lifestyle, definitely check out this link. It's in the video description, so that's for TIA Premium. Plus, there's over 20 hours of education for trading and investing, and then also our weekly live group calls where all of our members ask questions and we go through the markets in a macro outlook, crypto, real estate, metals, financials, everything like that for the more macro picture. So going back to the markets right now, looking at the long term. So I've checked the short term, updated that. It looks like we might be going through a bit of a downtrend at this point. It's only short term, so we're not going to get too hung up on that. The big thing I want to look at here is the long term, so the bear market rallies and these patterns in terms of timing. So quickly looking at the hours, the years we have here, 2014, middle of the bear, 2015 was the end of the bear. So we had a couple of years there for some data. 2018, middle of the bear, 2019, end of the bear. We had a pretty significant bear market rally in 2019. And then into 2020, basically the end of the bear after the COVID crash, and the market started to move up. So I want to look specifically at 2022 bear market, looking at different timings here. So really I want to focus on what Gann would have used to measure these rallies to give us an insight as to where the top might come in terms of timing, and potentially some price we'll look at as well. So what Gann did was measure tops to tops, bottoms to bottoms, top to bottom, and vice versa, bottom to top. This is to give an idea of what the market, so the participants, the traders, the investors, anyone that's involved in the particular market that we're watching, what they are feeling and doing in the most recent history, and we can look at longer term history. What I've picked here is the 2-week chart, and we're just going to look at some of the time frames. So you can probably pick it up here, what is happening right now in terms of the movements for Bitcoin, at least since the first all-time high peak in April. So we're going back approximately 16 months worth of data. Each of these candles is 2 weeks, and basically pretty clearly here we're seeing a lot of 5-week patterns. 5 weeks up, 5 weeks down, 5 weeks up, 5 weeks down. We're coming towards the end of the 5 here. So I should say it's 5 2-week periods. So not just 5 weeks, but basically 10 weeks. Basically 5 candles, or if you've got it on bars, same deal. So 5-week periods here. We can go back to the peak, from the top to the bottom, 5 bars, 5 candles, and that is almost or around about a 10-week period. So it's coming up to about that 2-month period. The market is doing things in approximately 2-month turns. Moving from that low in June to the next peak that was at the end of August, early September actually, if memory serves me correctly. Again, 1, 2, 3, 4, 5. So it could be 8.5, could be about 10.5, but it's coming into about that 10-week block. Okay, so 5 candles. I hope we're following here. Again, 5 up. Now I'm measuring top to top. So the market peaked and then peaked again. 5 bars again. So top to bottom, 5s again. Bottom to this next top, this was the bottom in January, so after those pretty severe sell-offs into the peak of late March, early April, and this was when the Bitcoin conference was going on in Miami, so there was a lot of hype, but the market really was not moving up like it would have done in a bull market. So we had another bear market rally at that point. We had 5 candles, 5 bars, which, like we know, is approximately 10 weeks. Then that significant sell-off happened, and that was again 1, 2, 3, 4, 5. What do we know? We're up to that 5th point right now. This doesn't mean that we're going to peak out at 5 candles or 5 bars. It just gives us a rough idea of what the market, what the vibration of the market is doing right now. What are the investors and the traders doing? When do they like to give up on moves? When do they like to start selling off if it doesn't happen for them? When do they like to start buying if it's already significantly sold off? It's basically just looking for those approximate turning points in the market. And what it's told us over the last 16 months is that we are drumming to the beat of approximately 5 lots of 2-week periods, so approximately that 10 weeks. That's just what the market is telling us. Some of the nuances that you can see here in the timing is, of course, going from the bottom to the tops. In this case, it's 4 periods, but this is 5. But if we measure from the bottom to the top, then we've got 10, which is basically double of the 5. So the drumming to the beat is still in those blocks of 5. So just to see if we could be invalidated or this could run up even further than anticipated, because we always have to expect that we could be wrong. If we move out to 10 weeks here, just doubling the drum of the 5 sections up, or the 5 periods, 10 bars or candles brings us out to approximately October. So if that's to occur, and we're going to be wrong here and we start to move up in these periods, then we could look somewhere towards middle to end of October. And then after that, we'll start to see whether we get that 5-week turnaround. Now, of course, this is just to give us an idea of where we are. At the moment, the 5s tend to be working out reasonably well, because we can see here we did have a 10, but let's note the percentage from top to top was about 30%. So 30% is significant, but it's nothing that you would be looking to basically DCA and then hold for just 30%. It's a good trader's market, but if we're looking at my own opinion, it's not something that I'd be that keen on considering the risk I'm taking investing in cryptocurrencies. Taking a look at the previous bear market, so 2018 into 2020, considering the COVID crash low, you can see the drum here was approximately the 4 bars, so 4 periods being the 2 weeks again. 4 up, low to top, 4 up, and I'm using this peak because the price difference between this peak and the following is only 3%. So the market really did basically stop and have a bit of stopping volume, didn't really go much further, and then had a reversal. These things are the little nuances which come with trading because there's nothing that is precise. It's nothing that's exact. It's just to get an idea of what may happen. So we had the 4 weeks top to top, another 4 weeks in that period before a significant reversal. And then we had that really big run from the low to the top of about 11 periods here. So 12 is obviously 3 times 4. So that also works into that drumming of the beat. If we wanted to break this down into those smaller peaks, we got about 5 here until it peaked out. You had about 9 here until it peaked out. So 5 to 9 is 4. You got 5 weeks here, just short of that 4 periods. And then you go into the final peak, which is only half that. You got the peak to the top, 2 periods. So 9 to 11 is obviously 2. So it's half of that 4. So this previous bear market was drumming to the 4s and the 2s and the 12s, more so than what we're seeing now, which is sort of around that 5s and the 10s. 2 other key areas we're going to have a look at is volatility using the Bollinger Band, which I don't often look at, but I think it's good just to have a look at where this could end up, looking specifically at the volatility in the market. It's a good key lesson that I've learned over the years. After big moves in the market, they tend to go quiet. And the Bollinger Band shows this really, really nicely if you're unfamiliar with a market tightening, because we can get swept away thinking that this bear market rally is the new bull market and that prices won't come down further. But basically, when we look at this, every single bear market over the last 40 years, at least in the S&P, includes bear market rallies. Some were very large, like we saw for Bitcoin in 2019, and lengthy and convincing. But eventually they come back and they retest somewhere around those prices. So every single bear market rally, we get the prices coming back. So first I want to have a look at price and then look at the Bollinger Band. And this, I think, is really, really key to what's going on because we could see big spikes in price. Bitcoin could jump to 33K, 43K, but eventually I do think the market will retreat and come back and test some of those previous levels. I don't think it's about to take off into a new all-time high bull market that gives us 80, 100 grand, okay? And so this is the bear market. This is the bear market rally, and it was very, very significant in 2019. But you can see here on the 50%, it came out, it's wicked above, it spiked above, but it closed on or pretty much just underneath. So the candles and the bars, they could not get above the 50% level and close. Remember, this is a macro view of the market. It's a 2-week period. Each of these candles are 2-week periods. They're very, very significant. And it tried it once, it tried it again, and closed underneath. It tried it again, closed underneath. And then eventually, when the market was ready, many months later, it was able to break out. 34 periods, so that's 68 weeks, a year and several months until it could break out. Now, I don't know if that's going to happen this time round, but I'm very wary that if we do get a significant, like a really big bear market rally, then I'm going to be watching the 50% level of the entire bear market range if, of course, the 17.5 is the current low. So what does that look like in terms of price right now? So the 50% point from the bear market is at $43,300. But of course, I don't want to get ahead of myself. That's a long way away. The first level is 32.9. So basically 33,000, which is a significant level that we are watching based on previous support and resistance that the market has put in during the bear market. So even if we are to get above this level, I would still want to see Bitcoin closing above the 43.5K level and finding a new base before it can take off. Now, of course, this is macro, which means it's a long way from the current lows, which is why I also look at dollar cost averaging at particular lows, which could be significant lows and bouncing around the current levels of the lows, right? Anything under 20K seems like a pretty good buy at this point, even if the market is to drop 12 to 12K or 10K. Obviously my opinion based on what I'm actually doing in the market. Looking at history, some of these major moves, we could see it bounce up and come and test those mid 40Ks. But if it doesn't close above there on a macro picture, then I dare say that we're about to see another retreat and testing of lower prices, which could extend over the next 12 or so months. It's happened before. This happens every single bear market that we have seen in history on the major traditional markets. I don't think it's going to change on Bitcoin. Of course, I'm adding in my opinion there. And Bitcoin is basically beating to the drum of the traditional markets at this point in time. Things may change in the future, but for now, that's what's happening. And finally, the Bollinger Band. We've got to look at the volatility in the market. So taking a look at this bull market, we can see the market is pumped up, huge volatility, the bands widen. And as the market starts to roll over and go into a bear or at least into a quiet accumulation period, the bands start to roll over and come together to form more of a consistent, smaller channel. It's happened every time in history. You can see we had the big widening of the bands, coming together of the bands, widening as it tries to go on a bear market rally, and then they come together again before we explode and take off again. So at the moment, what we're seeing is the market coming together, at least the bands coming together. This is basically just showing us that we're not ready yet. There needs to be some more energy and some more time built up before we can take off. What people worry about is where will this occur? Where will the price occur for this? It could occur above 30,000. Maybe it occurs below 17. That's why we look at the timing and the pricing in other analysis. But in terms of the Bollinger Band, it does look like we're at least going into some sort of quieter period over a more macro time frame. Yes, we can get these significant moves up, but we still need some sort of quiet period for the market to pool its energy together again before it takes off. And if it doesn't happen, then we probably won't see as big of a bull market that we have seen in the past. Other previous cycles, you can see we've gone on big extremes of the band dropping together, coming together, rallies, and then we start to turn and head up. Like you can see with these levels here, just starting to turn and start to head up together for a new bull market. You can see it on the previous bull market and bear market as well back in 2011. Bands are extended, bands come together, and of course this is much more volatile over 10 years ago because there's a lot less money in the market, so it's easier to drive and things happen a little quicker when it comes to these shorter term cycles. So again, coming together and then starts to explode the other way. Overall, I'm very bullish on Bitcoin long term. I'm wary of the bear market rallies. They've happened every single time in history, so let's not get caught up in any of the FOMO that may happen. And we've got some prices in mind if the significant move does happen to let us know, is it going to be a false move or is it actually taking off sooner than we expect? So we're prepared, we are planned. I hope you guys are too. If you're interested to learn more about investing and trading, definitely check out the link below, TIA Premium. We're going live tomorrow with the members, so join us over there learning more about how we went from part-time into full-time into this gig. I hope to see you over there. Links in the description, guys. See you at the next one. Like and subscribe. Until next time, peace out.